I guess we can start going now. I'm Eric Kraus. I am a commentator on Russian finance, and I've been an investment banker at various places in my very uneven career. I'm currently working in Southeast Asia, basically attempting to do Russian finance deals. I think for today's format, I'm going to ask all of my panelists to speak from their chairs, and I will take the prerogative of speaking from the podium, being as it is that I'm the chairman. I was asked to say a few words about the current political situation. But first of all, let me thank our foreign guests who made the long trek to Moscow to join us today for today's Open Innovation Forum. Most especially, I was hugely encouraged this morning to see our many Chinese friends who have accompanied to Moscow your deeply respected President Xi Jinping, whose Chinese dream continues the historical transformation begun by the great Deng Xiaoping. You're working to build a new multipolar world order for the benefit of us all. And your friendship for Russia during these turbulent times is much appreciated. It will not be forgotten. Thank you very much for joining us today. There is for me a certain personal satisfaction in seeing Russia finally looking east. Having left my native France 17 years ago as a financial strategist and then managing director for several Russian banks, I have long argued for Russia's new Asian century. This was initially met with derision. I was told that Russia and China were kept apart by their histories, by their cultures, by their mindsets. Russia and China could never find common ground. A recent former U.S. ambassador to Russia, who was at the time a Stanford academic, confidently and somewhat condescendingly informed me that Russia was so afraid of China that she would be compelled to beg Washington for a defensive military alliance at whatever price the Pentagon chose to impose. Well, I guess we all make bad calls now and then. But unlike a strategist, diplomats and journalists don't have a track record to drag around behind them. Life has changed. The overwhelming political, diplomatic, and economic logic, which argues for an ever closer alignment between Russia and the Asian world, is making itself felt. The Russian double eagle looks both east and west. And if in the first post-Soviet period, Russia tended to neglect her Asian geography and long historical involvement with the Asia-Pacific world, today China, India, Vietnam, Korea, and Japan, Singapore, Malaysia, and my apologies if I left anybody else, are very much back on the radar screen. I hope I won't offend my Russian friends by saying that there is something of a local tendency to relax and enjoy life rather too much during the good times. Quite fortunately, in compensation, they are truly formidable in their response to crisis. Russian history provides ample evidence of this. Today is one such time. Profound changes in the established way of doing business and new political alignments are a vital necessity. If properly executed, we shall look back upon the current difficulties as a blessing in disguise. In particular, as regards capital markets, Russia is now compelled, forced to abandon old habits and seek innovative solutions. In particular, this means an unprecedented opportunity for Asian banks to seize market share. I'm currently working on debt issuance in Asia, and we'd be delighted to discuss in person with any of you interested in doing Russian issuance. As Vladimir Vladimirovich Putin has repeatedly declared, Russia has the vocation to serve as a bridge between East and West. That has not changed. But for Russia to play this role, her Western friends and partners must welcome Russia in as an equal, with her own vital interests, history, and culture. These goals are most certainly not incompatible with those of the European Union, but must be treated with respect and understanding. With the European economies teetering on the brink of renewed recession Now is certainly not the time to allow diplomacy to be hijacked by those with an imperial agenda or who may wish to refight wars long past. I'm an optimist. That's why I live in Russia, of course. I strongly believe that the current crisis shall blow over and the diplomats stop shouting and once again learn to listen, with negotiated solutions being sought. That Russia is not compelled to choose between East and West, but instead shall play her natural role as a bridge in a multipolar world. Moving on to the theme today, just as the Russian climate swings between glorious summer and grim winter, the local mindset tends to range between hopeless, self-complacent pessimism and occasional bursts of millennial optimism. In fact, the reality is somewhere in between. 14 years after what was, following a false start, the true beginning of Russia's post-Soviet transformation, it is still a work in progress. But for that very reason, the Russian market presents extraordinary opportunities by comparison with more established places. You're all professionals here today, and it would be patently absurd for me to stand before you declaring that all was well, that the radiant future was within reach. Shortly before assuming his presidency, Mr. Putin published his Russia at the turn of the millennium, stressing the enormous challenges that lay ahead, as well as the frankly dire state of early post-Soviet Russia. There has been enormous progress over the past 14 years. A hell of a lot remains to be done. Dmitry Anatolovich Medvedev has repeatedly stressed Russia's need to diversify her economy towards innovative technology, leveraging off her rich resource base to develop a more dynamic and diverse economy. It is interesting to see how much of this is going to be simply expressions of hope and wishes and how much becomes reality. The early phase was pretty difficult. It's looking a little better now. Russia will probably never compete with Taiwan for mobile phones nor Vietnam for toasters. But Russia has given the world more great thinkers per capita than any country I could name. And there remains, and it's an enormous depth of intellect, of technology, of innovative thinking, and some problems with the execution. What has been sorely lacking has the ability to commercialize new technologies, properly functioning capital markets to fund business development, as well as basic international marketing skills. From your standpoint, given that Russia is still in the intermediate stages of transformation, and the market has certainly not been fully arbitraged, there are innumerable early-stage business ideas waiting to be exploited, as well as a relatively uncrowded playing field. Despite the widespread perception, I can say from experience that the great majority of foreign firms doing business in Russia have been printing money. In terms of innovation, we've seen a few great success stories, and my panel will be discussing them, but far more remains to be done. Much could be learned from the Israeli experience of technology incubators and international partnerships, in particular with Asia. Further reform is vital. The legal code must be improved to facilitate onshore business development, so not everybody has to set up offshore structures to guarantee an ability to develop their businesses. The perception of sanctity of property rights must be reinforced. And this not solely for foreign investors who are already reasonably well protected, but so that Russian investors can feel safe investing in their own country. And any of you who read newspapers are aware of the fact there has been some controversy along those lines recently. I don't need to go into the details here. Russia still needs to develop deep pockets of long-term investment capital, which has been sorely lacking. It is vital that investors, both Russian and foreign, get the sense that someone up there actually cares about their concerns. Closing, a word to our European and American friends. You have probably read in the Western media that Russia is closing herself off from the world, looking inward in some sort of opposition to the West. When you do, ask yourself, what is the hidden agenda of the people who write such things? I am happy to say that it is patent nonsense. Russia is open for cooperation and exchange. She is open for capital flows and investment, open for sharing of technologies and business opportunities, open for infrastructure and energy products. Welcome to Moscow, and welcome to the Open Innovation Afternoon Session. And if I may paraphrase Chairman Mao, may 1,000 partnerships bloom. And now, to the nuts and bolts, I am going to hand this over to my panel, and they will tell you what's really happening, because I'm watching this from above.
Добрый день, коллеги.
Good afternoon, dear colleagues. The organizers asked us to prepare a short presentation. You will see it on the screen. I'm Mikhail Romanov. I am head of Telecommunication Department, Ernst & Young. So the presentation is in English, and I will comment on it also in English, and I'll be ready to take all your questions.
Head of the TMT sector for Ernst & Young. This is a presentation that deals with the global statistics mainly. Less about Russia, more about where we stand in 2013, 2014 in terms of the investment, the high tech, and the economic climate. The 2013 has been a record year. And in fact, 2014 has been even better. 2014 is the best year since 2010 in terms of the volume of transactions that have had their IPO in 2013, and in terms of the capital raised. These are some of the statistics that you see. 2013 has a 49% increase in terms of number of deals, and a 94% increase in terms of the capital that was raised. Alibaba was, of course, the highlight, as you very well know, but what's interesting to mention is that Alibaba was only 13%, not only, that's a very large chunk, but it's 13% of the total capital raised. So even without Alibaba, 2014 would have been a record year. The next slide talks about the finance, the PE and the VC, the financial sponsored back IPOs. They continue to be and are evolving into a major driver. 2014 in those terms was the record year since 2001. PE and VC account for approximately 31% of the total deals. There were 264 deals, and 56, so more than half of the proceeds. So the PE and the VC participation in the companies that have done the IPO this year is quite dramatic. The UK dominates in the as the financial sponsor in terms of the IPOs backed. The UK statistics are 35% for the number of deals and whopping 71% in terms of the capital that was raised. The next is an interesting slide. It basically talks a little bit about Russia as being one of the rapid growth markets. The cross-border listings are also quite high. I mean, they're increasing year over year. There were 8% in 2013 as compared to 12% in 2014. So the companies that grow up in one country and then do an IPO in another country, that is becoming a very large segment. The USA is still the champion for hosting. About 52% of the cross-border IPOs are hosted in the United States. All of Europe accounts for roughly 34%. And what's interesting here is the rapid growth market are now roughly 45% of the total IPO volume. Naturally, Russia is one of the rapid growth market. So the market size itself is small, but they contribute heavily to the number of IPOs that are happening. The last but one is the M&A. The M&A is increasing. This shows the statistics only up until 2013. In 2014, we see that the median deal value has already increased. It's actually a very large one as compared to all the years before. It was very large in 2013. In 2014, it's even bigger. We don't have the final statistic, but we know it's going to be over 400. And the number of VC-backed M&As is also up, even on the 2013. The 2013, as you see, there were actually fewer deals, but each one with a higher value. And that seems to be the indicator that the average deal size is getting bigger and bigger. So in 2013 it's going to get bigger again, but the number of deals will also increase. So 2014 will most likely be, again, a very champion year. And that is actually, I had another slide, but somehow that got deleted. So that pretty much wraps it up. I will maybe only add in words that in terms of where we see the most investment, where the VC fund invest in general, is in terms of the largest deal size, it is in the payment and the financial technologies. That seems still to be the sector that attracts the most investment. And in terms of the number of deals, so the diversity and the number of deals, each one, for a much smaller investment, of course, is still the software as a service and cloud. That seems to attract a lot of smaller investments. The total number invested in the financial services sector for 2014 was closely 9 billion, which basically tells us that this is still an extremely popular place and an area of what is considered to be by venture capitalists as the area of high growth. Thank you very much.
Thank you very much. Could you give some sort of comment on how Russia interacts with the international markets for IPOs? Is it possible for Russian companies to access global markets, and if so, how? It was for you. I'm just on. Sorry about that. In terms of your presentation, statistically, could you give me an idea about how Russia interacts with this trend?
There's a good tendency in Russia. The statistics are probably not as robust. For example, if we were to compare Russia, if we take the cross-border, which is probably the slide that is, that was compared rapid growth market to the developed market, where Russia is a big player, we still see that a lot of the cross-border trading, if you compare, for example, Russia and Israel is also considered a rapid growth market, the statistics are very much in favor of Israel. Russia is probably, and I'm sure, for example, Sasha as a venture capitalist will comment on that, is entering that exit phase where companies are being either sold to strategic investments, and we're probably going to see an uplift in the next couple of years. What is less evident in Russia still is how the funds actually take the company all the way up to an IPO. So in terms of the IPO, Russia is still not as robust. Okay, most of the deals that happen are M&A related. So one guy sells it to the next guy and so on and so forth. Whereas a company that is taken from zero level up to where it's stable enough to actually exit on a serious stock exchange, those kind of examples in Russia are still extremely scarce.
Okay, thank you very much. If Alex would like to pick up from here.
Good afternoon, ladies and gentlemen. I'm Alex Lupachev, and I represent Russia Partners, one of the largest and oldest private equity firms in this country. We were established in '94 as a US-based fund. Currently, we manage our fund number 6, and it represents capital from Asia, from Europe, and from the US. Our Asian LPs are CIC from China and GIC from Singapore. We invested over $1 billion in Russia over the last 20 years, backed 62 companies, and did more than 30 exits. We've been quite active this year, did 4 deals, and have 2 deals in progress after term sheet stage. And we also structured 2 exits, returning more than $100 million in exit proceeds to our limited partners this year alone. Speaking of lessons learned, I would like to highlight a few trends which are important today and will be important going forward in the next few years. First, what we need to keep in mind as long-term investors is that we need to be flexible in structuring the deals and business models of our portfolio companies. What works today would not necessarily work tomorrow, and we have to back entrepreneurs who are open-minded and flexible. Second, what we think is important is the right balance between the companies focused on domestic market in Russia and the companies focused on global markets. Out of 6 deals this year, we have a 50-50 split between the companies which work with Russian consumer, which is still a growing market, and global customers. A few good examples are companies like EPAM or Parallels. They are global brands, and some of them are listed on New York Stock Exchange. Speaking of lesson number 3 is flexibility about club deals. If you want to explore new geographies or new sectors, you have to participate in investment consortium with other investors. Out of 6 deals this year, 3 were club deals with prominent investors out of Asia and the US. And last but not least is being smart about deal structures, about primary deals, cash in, and secondary deals, cash outs. Out of 6 deals, 4 were primary and 2 were secondary. In the current environment, secondary deals could represent a better return on investors on investment than primary deals. Speaking about our view going forward, we still believe that there are growth opportunities across various sectors in Russia and CIS. Traditionally, we work along 4 business lines: IT, healthcare, financial services, and logistics. IT is the largest and the most successful part of the portfolio. We have 12 portfolio companies out 22 in this sector, and it delivered significant returns by various exit strategies. One of the largest exits in this space is our portfolio company EPAM, Offshore Software Development, currently traded on New York Stock Exchange and valued at around $2 billion. Another example of exits in this space is the company called Slice.com, our most recent exit in August this year, a company based in Silicon Valley, and the company which employs more than a few dozen software engineers in our region. It was exited to Japanese internet holding Rakuten a few months ago, and it represented a significant return to its investors. The company is focused on big data and consumer analytics. So we believe that Asian investors and Asian strategic buyers will play a more important role going forward. So that's it from my side.
Okay, unfortunately, because of the acoustics here, I think some of us are having a bit of difficulty hearing. If we could perhaps raise the volume a bit, Alec? The email. Okay, I guess we will move on to Andy Tsao. Would you like to pick it up from here?
Sure, thank you. Good afternoon, everybody. My name is Andy Tsao. I'm a managing director with Silicon Valley Bank. Maybe in contrast to how our moderator started out the panel, we are not a Chinese bank. We have operations in China, but we're an American bank, and we're delighted to be here at the Open Innovations Forum. We have been expanding out of our base in the U.S., where we're the leading bank for the technology and innovation ecosystem. We work with approximately 50% of the venture-backed tech companies and more than 50% of the venture capital and private equity funds that support them. And we've been expanding internationally for the last 15 years, and we have operations in UK, China, India, and Israel. But we recognize that there are new innovation hubs that are developing globally, of which we think Russia is one of the leading ones developing. And hence we've been coming here for the past 3 years, getting to meet leading entrepreneurs and investors and really helping them to bridge to our market. We're also here partnered with Sberbank. You probably have heard of them in terms of helping them with the development of a venture banking model that would be very similar to Silicon Valley Bank. So from that perspective, looking at the exit environment, and I think my fellow panelists from E&Y did a great job in terms of summarizing some of the statistics, but it is a very good time right now in the for exits in the venture environment. If we look at the U.S. in particular, again, I think in terms of M&A and IPOs, I mean, you described a lot of the IPO statistics. A strong IPO market, in part driven by some of the new legislation that was covered in the U.S. through the Jobs Act, has allowed smaller companies to be able to really afford the process of going IPO again. And a strong IPO market certainly helps the M&A market. So I think relative to a Goldman Sachs report that the M&A market this year has hit a 5-year high in terms of transaction values. And you can see that in the tech, ripple through the tech and innovation sectors. Certainly, I think WhatsApp is probably the prime example of that with a $19 billion acquisition by Facebook, Oculus at $2 billion, Minecraft for $2.5 billion. These are great examples of a very strong M&A environment. And that, in turn, is leading to pretty high valuations for breakout companies, certainly in the U.S. and the Silicon Valley. And again, looking at companies like Airbnb, Uber, who have all had valuations in the high teen billions of dollars as private companies, again suggests that we're in a period of time of strong exit opportunities. That's trickling also down to angel investments. And we recently co-authored a report called the Halo Report that talks about angel investments, and pre-money valuations for angel investments in the U.S. through the second quarter have increased roughly 10% to about $3 million even at the angel round. So maybe turning a little bit to the topic of the panel around strategies for maneuvering and creating good exits, we certainly think that discipline around valuations, getting significant ownership stakes continue to be important parts of the puzzle. At the same time, we're seeing, it's really difficult to predict where potential exit opportunities are going to be at the very early stages of company formation. However, as companies grow and mature, having the ability to do outreach to potential buyers, to work actively with the corporate venturing and corporate development community, which arguably has been more active than they ever have been, utilizing a strong board of directors, taking on quote-unquote smart money, also, and board members with connections that can help you maneuver those potential exits would be from our perspective good things or best practices to consider. Let's see. Final bit of advice in terms of creating your, as you're preparing your company to be more exit ready in this kind of environment. It's much easier to put your company in terms of corporate governance, tax structures, on the right track from a relatively early stage. So utilizing good advisors, lawyers, accountants, et cetera, to make sure that the company is exit ready. Again, in terms of M&A, thinking of things like compliance, and from a U.S. perspective, one of the new things we wrestle with, particularly as a bank, is the Foreign Corrupt Practices Act, and so being compliant around those kind of areas makes it much easier for you as you think of successful M&A, and it will trickle through in terms of valuation as well. So again, those are some opening comments. We think it's a very good environment for exits. We expect, I think you went through the Q3 numbers, but Q4 we certainly expect to be an uptick over Q3 for one of the stronger exit years in a number of years.
Okay. Where is what would be the advice in terms of the sort of structure to use by Russian entrepreneurs who have an early stage project and would like to consider at some point bringing it to market? How should it be structured? Should it be, are you familiar with the various sorts of Russian corporate structures and how this works in real life in terms of bringing it onto international markets?
Sorry, who's the question for again?
Questions for you.
For me, okay, thank you. Sorry, it's a little hard to hear in here. Yeah, I mean, you asked a question about Russian exits before, and the one that springs to mind for me, we had, Sasha was at our conference on Friday that we did here in Moscow with Sberbank, focused on entrepreneurs. And we had Boris Kim from Kiwi as our keynote speaker. And certainly Kiwi is an example of a Russian company that was set up effectively offshore. And that's, we're a little bit biased from that perspective. We tend to look for companies that, from our view, again, are thinking more globally and oftentimes utilize offshore structures. So Kiwi is an example of one that ultimately went public successfully on NASDAQ, and a great example of a Russian business that utilized sort of more global best practices with structure to achieve, well, in part to help achieve a good exit.
Got a dead microphone here. If we could continue with Alex Galitsky. Is he here? Would you like to go next? Yeah, you.
Okay. If you continue with me, I will continue. So it is few. I will not make advertisement to fund Almaz Capital. So, but our model is very simple and straightforward. We are looking for tiny companies and entrepreneurs who have idea to become global. And to best, as we're speaking about point of view, especially the topic, strategy, how to get there and how to get results. So actually, each investor making money or making the deal for just for one reason, to make money. And each entrepreneur making his company not just to make money, but to do something special for the world. So ventures capitalists can say we're also nearby, but in reality we are very straightforward people. We would like to make money, since we have responsibility to money which we manage. From point of view of today's situation and the situation in general, we touched a few topics. How to structure company, of course. You need to structure a company where this company has a better protection of your IP, better protection of your holding from point of view of minority investors, minority stockholders. And from this point of view, it is only one law which protects this today. It is English law. So you structure a company where it is protected. So same for exit. If you would like to exit, people buying, they would like to have access to your IP, as they would like to have access to, again, to own the company. Here's a little bit more tricky stuff. When we did first fund, we did actually successfully 3 exits, 1 in IPO, 2 in trade sale. And what I found during the trade sale is that if you, even Almaz, very well known in Russia, I will not say too well known, but well known, we trade company which was from one perspective much better from technology, from other perspective had bigger sales, but we sold company almost 10 less for smaller monies than our competitors, since our competitors was Sequoia. And of course they sell company, I will say more shitty company, for much bigger money. Why it is? Since we have not so big brand name as Almaz on the international market, since nobody knows what the skeleton is hidden in some our back office, especially when you have developers from Russia or former Soviet Union or from Eastern Europe. So in this case, our task in second fund, for example, which we managed today to increase brand of our companies and to increase our brand. How you can achieve it? Again, it is a pretty straightforward point. You need to cooperate with leading investors. And we was lucky to do 2 deals, one with Greylock and one with Cisco Systems. It was even Cisco, our LP. It was our first deal which we did together, coming to the one company at the same time. So it increases your influence and it increases your check which you can get when you sell company. So for this reason, when we look on this, even we now recently sold 1 more company in Fund 1. So we see that merchant acquisition, it is a major driven point for companies which are originated from this territory. Why? Since it is not so many companies ready to IPO for a few reasons. Since you cannot find too many companies which build actually, let's say, system layer of technology which impact platform or which impact in general movement of industry in the world. We build mostly niche companies, and niche companies, they actually taking place in value chain. And what you expect mostly from it is that you will sell this company. It is what we are doing with technological deals. I'm not speaking about Russian domestic market and about business model market and about consumer market in Russia, since it is a completely different game. But still, I believe that most of them will be prepared for trade sales, not for IPO. It is my short comment. I think it is enough.
Can't seem to figure out this microphone. Continuing along with Maxime. Okay, that's it. Well, yes. Would you like to maybe take up there? Since you don't have a microphone, I'm afraid that's all I can offer you.
Nice to meet you. I'm an expert, Maxim. You mean me, right?
Sorry. Well, if you're an expert, then I'm sure you'll have lots of interesting things to tell us. So please go ahead.
I have something to say, and I would like to disagree with Alexander Galitsky. So firstly, just a few words about me, about the company. I'm the managing partner of Romanov. It's the investment and legal consulting company, and venture partner of Russian venture company. So. On the one hand, we deal with private sector, and from the other hand, we deal with state-owned companies, which has a lot of programs for innovation, which have many money to invest. So, but firstly, I would like to say a few words to our Junga KGM. Oficial answer, mentor KGM, Junga our Moscow life or hangout center. So I would like to say that if we would like to understand the different countries, we should know the language. So this year, China is a partner of this forum. So we should know the language, we should mentally understand it. Then, a few words about the what's the best way and what the opportunities we have from the point of, for example, legal point of view. Because as far as I understand, I'm the only lawyer today here. So Alexander Galitsky told that it's only English law can save us. I disagree because last 2 or 3 years we had a great, I think, breakthrough. We had great chances for Russian law to structure deals. What I mean, for example, we had important amendments to our legislation, which afford us to structure deals due to a shareholders agreement. We had new forms of companies such as investment partnership, so-called LPGP in another legislation. So we also have new models to structure deal like put options. So it could be used by venture investors. So I think we have a great chance to structure deals even in Russian law. And for example, it's Russian venture company, it's Rusnano. And of course, there is not so many exits at this time, but I think it's just a question of 1 or 2 years. So it's just a few words about the current situation. Thank you.
Thank you very much. Okay. Well, can I continue now with Sanjay Jason Wang, who is president of China, and I'm not even going to try to pronounce it, Private Equity and Venture Capital.
对，去那边的啊。各位大家好，我来自中国北京中关村。
Здравствуйте, я приехал из Пекина, из так называемого...
I'm welcoming here. I came from China, from so-called Chinese Silicon Valley. I don't speak that well English, and I don't speak Russian at all. So I would like to apologize for speaking at length. Our association of venture capitalists and private investors is very proactive and major association of this kind. Its membership is over 1,000. We support investments into private equity and investment funds. The total capital of our members is over $15 billion. Our association is a very active association developing private investments. I would be happy to share my experience, which was accumulated with regard to various models, investment models we are using. So these are the models we are using. We learn to find targets for investments and those development points which would help to attract more money. And to find the best possible breakthrough points to gain as much capital as possible. Number 3, we learn to locate and identify specific features of individual markets and sectors. Because both in China and the United States of America and Hong Kong, at different periods of time, different sectors, one could find different market entry chances. In other words, we learn to find the best possible approaches for investors. For example, we have a client, a manufacturer, a manufacturer of mini cabs. And we help him to invest into the United States of America in a high-tech company engaged in minicam business. At the same time, we also located an operating company. So, for 2 years, we went through the entire set of activities from both manufacturers and distribution channels. We put it as one package, resulting in a very good opportunity for our investor. Well, in fact, China's booming economy creates very good chances for investment opportunities, and we are very proactive trying to catch up with this booming development. I would like to thank you for your attention, and I hope that we will have an opportunity to socialize later.
Okay, thank you very much, and I hope everybody can hear something. I guess next we will have Dr. Evgeny Zaitsev, whose company, fortunately, I can actually pronounce. It's RMI Partners. Evgeny. And do speak into the microphone, because otherwise...
Thank you. So RMI Partners, the company I represent here today, is, thanks for the slide deck. Can I have a, you have a remote? Well, anyways, the company, can you flip to the next slide, please? The company manages Russian money. It's about $500 million. Investment geographies include the United States primarily, Europe, Israel, and Russia. It's an exclusively life sciences venture capital firm investing in biopharmaceuticals about 60% and in devices about 40%. Ruslana is the limited partner. Originally, this venture effort was created as a partnership with Domain Associates in the United States, as one of the biggest venture capital firms. Novamerica is a company in Russia. This is the Russian strategy, which is the recipient of all the intellectual property that being transferred as a result of investments of RMI. The company is 2.5 years old. It's been very successful in creating a portfolio of 13 companies in life sciences area. Most of them are primarily late stage, close to market opportunities, and a few of them are early stage, high quality deals. A little bit about my background. I've been in this business for the past 14 years, first with asset management company. It's one of the oldest venture firms in Silicon Valley, founded by Pete Johnson, one of the pioneers of venture capital, who was my partner for 9 years. Then we formed Helix Ventures. It's a spin-off from asset management, a life sciences only venture firm. And RMI Partners, I joined the partnership in the end of last year. And this is the real stuff. These are my exits over the past 14 years, and I wanted to use it to explain how exits happen in life sciences, because life sciences is very different from IT. And for example, if you look at the first company here on the list, Fusion Medical, it's actually one of the most unusual deals that I made. It was a PIPE, or private investment in public equity. This company actually failed their first product when they were already public. And we invested in a PIPE. We sold the company 10 months later to Baxter for more than 5x on our original investment. It was a very good deal for us, but it's a good example that IPO is actually not an exit event. It's a financing event, and you may actually be in a situation when you cannot exit after an IPO. And many venture funds these days, even though the IPO market is very hot, they experience problems exiting from the investments, because first of all, you have a 6 months lockup period, then you have various limitations because you're a large investor. You can only sell in blocks, you can sell at a discount. So in many cases, you don't want to do that. So in many cases, IPO is not a solution. IPO really needs to be sort of a value-added event, and otherwise you can only view it as a financing. A good example is this company closer to the very end called Chimerix. It went public in April last year. The stock has doubled over the past year. And this is a company that had a very valuable corporate partnership in place before it went public, worth $200 million, had several different products in the pipeline. So it was a very valuable platform that market really appreciated, especially recently. It's an antiviral company. As soon as all the Ebola problems occurred, the company appreciated more than 10% just recently. Most of the companies in the middle are acquisitions, and they're all medical device companies. And medical device companies usually exit through an acquisition. And some of the biotech companies also exit through an acquisition. You can see Bipar, for example, here. Bipar was sold for $500 million to Sanofi. This is a very interesting example as well, because venture capital investors, in many cases, exit from their deals before all the risks are realized. In the case of Bipar Sciences, we sold the company for $500 million. It was a very front-loaded deal. We got all the money back, and then Sanofi actually failed the phase 3. And the product is still not on the market, but investors got their money back. Some of the acquisitions are actually not front-loaded like Bipar. Usually biotech and medical devices have a very long tail of payments, sometimes milestone payments, sometimes they're called biobucks, because that tail can be extended to 5 to 7 years in some cases. And it could diminish the returns. For example, this company in the middle called Trivascular it's a very interesting medical device company developing a very advanced stent grafts for aneurysms. It was acquired for Boston Scientific for what could have been $1 billion acquisition with an upfront payment of $100 million, which we received. And then after Trivascular, Boston Scientific, you may remember that it acquired Guidant, and it got so much indigestion from that acquisition that they couldn't support all the development project. So they closed that project down, even though the product was really good. And the investors in Trivascular decided to do a spin-off, so Boston Scientific actually spit it out. The investors formed Trivascular 2 and finished the product. It went through the clinical trials, and it's now on the market. So in life sciences, as I said, exits are slightly different. You really need to focus on fundamentals, and you really need to create value, even if the company is going public. And recently, you may know that the IPO market in biotech has been really heated. But again, most of these companies that went public recently, they still not the exits for their investors. We're still waiting. For example, a few deals in the RMI portfolio went public. We're still waiting to get our money back. So that's my quick overview of what's happening in life sciences. Happy to go into details.
Okay, thank you very much.
Yeah, acoustic is not good. That's why it's better to show a couple slides which I provided. Oh, yeah. And some tool for changing slides if possible. What is it? Huh? Okay, so good afternoon, ladies and gentlemen. Yes, I'm representative of Moscow Exchange, innovative and investment market, some special segment. The main task of our project, which was launched about 5 years ago, together with corporation Rosnano, to support growing companies to go public. And now we have some result. It's you can see some statistical information, $3.59 billion total market capitalization. Not too much, but it's bigger than New Connect. By the way, it's the same segment of Warsaw Stock Exchange, which is very successful according to opinion. We have 42 securities of 34 issuers, not only equities, but also bonds and funds as well. And practically whole innovative industries are represented on this segment. And part of our project is a special platform for venture companies called IPO Board. It's shares post style platform. Shares post, it's now part of NASDAQ, American Exchange, and the same target to support venture companies to be ready for next step to go public. And now we have 219 companies. 4 companies already did IPO on our segment. So now innovative investment market, it's we cover a very long chain, starting from advanced startup and up to public segment. And more close to the topic of this discussion, what do we have now? We have close connections with whole private equity and venture funds in Russia. They have bulk of interesting companies, and we see that next year and 16th year it's time for exits, especially for institutional developments such as Rosnano, RVC, etc. And the question is our IM is already a systemic tool for the exit? To my honest opinion, not yet. But we have all possibilities to be this tool in next future. Our main bottleneck is lack of long money, long capital. It's the most serious problem of Russian capital market. As you know, that's why till now Russian companies, funds make choice in favor of foreign exchanges, and now we have only 3 venture-backed IPOs on our platform. Not too much, but I think the situation will be changing. And what's the prospects? What we are going to do in order to provide Russian funds or funds of Russian based with such a service as exits. And first of all, it's international investors, international cooperation. We have partnership with NASDAQ, but now it's a little bit frozen. We are thinking about Asian partners, but it takes some time and to go to East. But the main direction of our development is connected with pension funds, pension money. I believe that it's the most target of Russian capital market, and I see that I think it could be possible. And I expect that in maybe 1-2 years we'll see some changes in regulation, which allows pension funds, non-government pension funds, to invest money into innovative companies. And practically whole authorities, including Minister of Finance, Minister of Economy, they are in favor of such a solution. And also, yes, some additional measures, tax reductions, and so on, so on. And now we're thinking about introducing some new system in order to increase the quality of Russian companies, more strict rules of selections, to introduce, we call it premium listing segment for the best companies, for biggest innovative companies, and so on. And my forecast that within 3 years, IM can become an essential tool for exits and for the development of venture capital industry in Russia. Thank you. Спасибо за внимание.
Thank you very much. And now for the last panelist, I would like to ask Alexander Lupachev to give his views. He already spoke. Oh, well, in that case, this has been brilliantly organized. I think, Mr. Alimov, if you would care, Dima, if you would care to take the podium up there. There was an interesting question which has been raised repeatedly and which I have been hearing approximately for the last 17 years. which is when I started doing Russian finance, there is a dearth of long-term investment capital in Russia. There is a lack of institutional investors. Long-term used to be where you were having lunch. I guess the long-term is now where you're having dinner. We've been discussing this for, the better part of 2 decades. And I'm interested to know, I certainly see it in the equity and the fixed income markets. I'm less cognizant of the situation in venture capital. So I'm interested to know how the question of long-term capital, long-term funding plays into what you people are doing. Dima.
Sure. Thank you, Eric. Well, first of all, I'll briefly introduce myself. My name is Dmitry Alimov. I am the founder and managing partner of Frontier Ventures. We are a venture fund focused on internet companies, originally from Moscow, but now investing globally. So this is a very interesting question, Eric. I think that's one of the main challenges that we have as an industry, the availability of long-term capital. And in our venture capital world, it comes down to availability of potential limited partners in the funds. So essentially, if you want to invest in the Russian-speaking world, you have a very limited choice right now where to get the capital from. So you have private individuals, high net worth individuals, which is one source of investment, family offices, which is sort of private individuals, but on a larger scale. But you do have a very significant deficit of more institutional capital. Until recently, you had active global development institutions such as EBRD and IFC and some other European institutions like that. Obviously, now we live in a different political climate, which some of that funding is no longer available. And one critical piece, which I think is still missing in the Russian ecosystem, is the pension fund money, which is now currently legally not available to venture funds and private equity funds. So that's a limitation of the legislation, which I hope someone is working on, but currently that is not a source of capital for venture and private equity funds. In comparison to US and some other markets, that's a very, very significant source of VC and PE money, which is currently not available in Russia. But what I would like to do on this panel is to actually, in addition to hopefully addressing your question, to pose a question for the panel as a whole. Obviously, we live in a time of change. So right now, Russia is opening up to Asia, to China, and to some of the other markets. And that's going to definitely change the way we're doing business. And the innovation and internet and other technology industries are not going to be exempted from that change. So what I would like to ask the panelists is, where do you think that change will come from? Is it going to be a larger activity in the M&A driven by some of the Asian players? Do you think that some of the VC capital will come to Russia? Do you think some of the Russian investors will explore some of the Asian markets, which, by the way, we are? So I'm later this year going to Southeast Asia to participate in some of the events there, trying to look for some interesting companies where we could be helpful as investors. But I wonder what the panelists think about that, if you don't mind.
By all means, who would like to take the question?
I think that you can invest only where you're present. So if you're venture capitalist, you need to be close to your company. This question where we'll go. Yes. So the second fund, you are going to the market where market is open, where the ability to work on this market is easy. From point of view, I wanted to touch a little bit different, possibly topic, little bit. So since we today listen our premier and premier from China speaking about cooperation, so I think that this need to be looked through different perspective, taking that Even we invest in software mostly, we started to invest in hardware as well. But the reason for this is very simple, that today we know about software cloud. Everybody is speaking about software cloud, but what China created, from my point of view, they created so-named manufacturing cloud. We found that it is very easy with companies in few months to organize that production inside Chinese technoparks. It has opened big opportunity for Russian. Why? Since the point is that this hardware require a lot of software from one side, and from other side require a lot of physics. Physics, since that we need to have smart sensors, and here the Russian physicists can achieve a lot. So it is a way how we can go on the east, from my point of view. Answering on the second part of your question. Since speaking about where to get money, it is a separate question. I don't like to answer on it, but the point, you are going to the country only if you see the few deals during the year and you can open the local presence. And speaking about going east, I see that most of cooperation can be done from this perspective.
I can actually counter that, because if you remember venture capital industry the way it was in the late 1990s and probably early 2000s, it was a business model when venture investors only invested in the same area code, and they didn't travel to companies if they were out of state or out of country. And it has changed dramatically over the past 10 years. Most of the serious venture firms in the US have offices in Europe, in China, in Israel, and they're doing business globally. I mean, it's not just the general globalization that we see in all other industries. I think in venture capital, to realize the most returns and to create the highest value on investment, it's important to have a very different outlook these days. And also in my industry, for example, in life sciences, if I were to talk to a biotech company 5 years ago about Russia, they wouldn't care. It's 2% of the global market, it's nothing. They wouldn't care about the Russian rights, they wouldn't care about the Russian market, they would never waste time and money to even explore it. If you approach a biotech company today with a licensing opportunity or with some collaboration agreement, they're very open to that because they want to realize as many efficiencies in their development programs as they can. And it's not only about Russia, it's certainly about all other developing countries like China and Eastern Europe, all countries where they can realize efficiencies in their development programs and expand their markets.
Okay. From what I understand, we are running out of time. So thank you to the panel for your participation, for the experts, and for the audience. And I do hope you heard something. Thank you.